Good afternoon, everyone. It's Chrissy from Solstice ATR today, November 19th. What I want to do is a small, short video about the overall market. I just want to keep it brief to the point to help you out understand technicals, set up on the charts, as well as a little bit of moving averages and Fibonacci's. Remember, we use adaptive algorithm for side market, up market, and down market. We're not a broker dealer. Our past performance does not indicate our future result. And if you like this video, hit the smash button and you can subscribe on YouTube for this video for free. Let's go to the next slide. This is my first slide, and what I want to talk about is a trend. Is there a new trend forming in the stock market? You can see I have colorful rainbow, which are designed similar to Bollinger Band and moving averages to help us understand if there is a trend change in the overall market. Here I am showing a 10-year historical rate of return on the S&P, the Nasdaq, as well as the Dow. What can we see from? We can see that since the COVID-19, as well as, the 2017 bottom, as well as when we retested the March 23rd of 2020, the COVID-19, we retested this area, rallied quite a bit of high. We came back to retest a 250 simple moving average on the weekly 10-year chart. This is a 250 moving average, which is a cyan, and the 200 SMA, we cleared it on the weekly. And this is for the third time we tested the 50-day moving average, which is made out of yellow. So we understand there may be a possibility of a trend change. Can we retest a little higher to the 61.8? Yes. Can we come back? We're still in a downtrend, and we can come back as far as, the mid-range of these two channels, or we can continue higher to the 61.8. But what I want everyone to understand in this, to keep an eye on the different sectors in the stocks, the bonds, the ETF, the futures if you trade futures, like ourselves in the group, and Forex. I have some ETFs. This is the VTV, which is the mid-cap, large-cap growth, S&P 500 technology sector, IJKEMB. We'll give you a little bit more. IWM, QQQ, most people know who they are. XLP, consumer products. XLV, which is the healthcare sector. XLF, the financial. I should put XLE here. I typed it wrong. We can fix it later. It's XLE for the energy sector. BIL is the ETF fund for the Treasury bill 2 months to 3 month. JNK, 10, TNX, IEF, which is the 3 to 7 year. We have Bitcoin, SPX as well here, the Nasdaq as well as the Russell, the Dow, transportation, the dollar, and the VIX. Crude oil, gold, the ZB, which is the ZF, the 5 year. ZN is the 10 year. S&P minis, Russell, Nasdaq, the Dow, and so on. Remember, technically, we're going to look at the different time frames, whether we're going to look at the daily and our time horizon, whether we are a day trader, a swing trader, long-term investor. So you have to look at the different time frames for the setup. Like the 250 simple moving average when we tested the three instruments, which is the Dow, S&P, and Nasdaq, and the 200 SMA, we got a nice bounce. Every time we got to the 50 simple moving average on the way back up, we found resistance. Does this mean we can continue? But we have to keep an eye on those moving averages. Volume profile has to do with basically the overall sentiment, where there is most value and time spent in relationship to price, where there are gaps and where there are not gaps on push-ups and push-downs. Supply and demand zones, where we get contraction and expansion. Fibonacci levels, we can see the zero line here. From 0 to 100, this is our 50%. Here, I'm not using real Fibonacci's. I'm just rounding off to 25%, 75%, and 50. We do have extensions 25 to the top, 125 to the bottom, as well as 150 and as well as 125. But Fibonacci's are sequence numbers, which start from 0 to 23.6, 38.2, 50%, 61.8, 78.6, 100, and so on. It can go up to the extension to the top as well to the downside. So remember to use these, and you can use resistance and support bottom indicators, momentum indicators such as MACD, stochastic momentums, CCIs. So that way you get a couple of technicals at the bottom matching with the upper moving averages and supply and demand zones to look for a breakup or a breakdown in the technicality. Let's go to the next slide. Here I have the SPX, which is the Fortune 500 companies. And I said, look, we're going to be open-minded to either side of the market. We have the Federal Reserve Board. We know they still have interest rates on their hands. Are they going to slow down? And the news came out on Friday this week for the second time, told us that there is better numbers in inflation. Does this mean they're going to put a brake on the tampering and the Feds will slow down interest rates such as 75 basis points, 50 basis points, 25 by end of either the year or by March 2023. So we have to have a good outcome where the levels were, where the moving averages were higher and lower in relationship to a recession, non-recession, if we are in a bearish market or we're getting reversals. We have tested the 3,500. You can see it here, 34.91, the low of the SPX. And we got a nice bounce back to the 4,000 area. Can that 4,000 continue to the 40.50 to clean the 116 simple moving average and clear the 50 simple moving average, which is sitting around 41.59. This includes the weekly. You can see here it's maxed out all the way to the 1930s, but I didn't go back in the charts. So I wanted to show you that the 2017 breakup, you can see this is 2018, this is 2019, 2020. This is the February high. This is the March low. We came back to retest the basically the January, February breakout in 2017. We retested the breakout here in 2018, got a rally up. Then we had the COVID, consolidated, and ARK Management has tested the March lows. We know that. We had the NASDAQ or the QQQ or the NQ or the NDX tested this area here, which is this consolidation between the August, September, October before the November rally. This was a January low. As well, we had Netflix retest the 2017 lows, and now Netflix are getting a reversal. So we have to be open-minded either for 3,400 or going back to 4,200. So we have to be open-minded if things do change in the market, in the global market, as well as domestic market. And this is the reason why I put this slide up. Pay attention to technicality, not what you think. And if there is a change in the trend, look for not missing out. Buy the opportunity when the market is going down, sell it on the way up. Let's go to the next slide. And this is the slide. I want to say thank you to everyone. You can once again hit the subscribe button. What I want to do is go over some charts so that way you can understand what we're looking at. Let's go right now and minimize this chart. I have the S&P here, 3-year daily. We can see from high to low here, this is the low. This is the high. This was the COVID before the breakdown. We retested this area in the 50% Fibonacci. We were in a linear regression uptrend for a while. Eventually, we break down here. We tested this double top, fell down to the backside, rallied back to the 50 SMA and the 200 SMA on the daily, where it was the 50 SMA on the weekly charts and the 200 SMA still above us. If I zoom in here from the January low, we can see that we retested this area, bouncing back. We cleared the 50 simple moving average. We cleared the 116 simple moving average this week on retesting it on Thursday, rallied back up, but we still haven't cleared this whole move up here. Can we fall back down? Yes. We have to have an open mind from high to low. This is our 61, 50, and 38% Fib in relationship to this downtrend channels. If I grab a Fibonacci, such as a fan or a pitchfork, and I want to measure the levels to see where we are in relationship to a move up or a move down, I can grab the Fibonacci fan, which is this one right here. You can see this is a regular Fib. This is a Fibonacci. And if we grab the fan right here, it shows this is a fan. I added a little bit extra Fibs on it, and I connect this low here to the high. This is our 38, our 50, and our 61. 61 has been tested. We looked above it, failed, and came back to close above it. Do we continue to get to the 200 and the backside of this channel to get to the 78%, then the 85% up the top? What we want to do is take this Fibonacci off. Remember, we can use fans. We can use percentages such as this. We know that this high was from here to this low is here. You can see it. If I do it, this is our 50% retracement. We are at the zero line. We're above the 23 and the 38%, trying to continue to the upside, but we can fall back to the 23% or the 27.272 number. Let's remove this one. And what we can do is on daily basis or weekly basis, I want everyone to understand how to look at the Fibonacci's in daily basis, weekly basis, monthly basis to know what the technicals give you. So if I break down the S&P here to, let's say we're going to do 20 days, 1 hour. We know the overnight action, we can see where the gaps are in relationship to the push up and the push down. If I take the prior week high, which was the Tuesday till Thursday's low, if you can see it, if I grab this Fib, we're going to use the same thing. You can see when we rallied back up, we tested the 150, fell back down to find support where there was consolidation here, the breakout here after the Fed announcement, and the rally this week was the down move. We tested it and bounced back up. On the hourly chart, we are above the 250, the 200, 116 SMA, 89 EMA. We are underneath the 50 simple moving average, which is yellow, and the 18 in consolidation. So what I want to do is take this Fib off. So to show you how to look at the weekly range of the following week to know where we are in relationship to the moves. So we know this was Monday's high, Tuesday high. This was the Thursday low. If I take the bottom to the high, you can see it shows 100 or 0, or you can draw vice versa from top to bottom. And we can see where minus 50%, minus 80%, minus 100. And similarly, going back to the 0 line, and above to the 200. So basically, when we are trading, we want to know where the 50 is, the 20% is, and the 80% in relationship to those moves in order to trade technically and a setup for a momentum indicator to give us a move up or a move down. The reason why we found support here, this was the prior week, which is the Thursday big rally in the gap. We have a gap here. I know I have this cloud here. This is a stochastic momentum indicator with a moving average, and it calculates the volume for you if the trend is up or the trend is down or there's going to be reversals. So when we retested this area up here from the prior week range bound for 6 days, we came here and we got this breakout in the earning, and after the CPI report, we pushed up higher. But this week's range was what? We were range bound. We looked up on Tuesday. Monday was an insight to a little bit down. Tuesday we gap up. We fall. We go Wednesday side action. On Thursday we fall down and we come back to the prior breakdown of this consolidation where we found the breakout of the prior week. Does this mean we can continue to the upside? Possibly. So I want you to understand on a setup to know what you are doing in relationship to price action. Let's move this out of the way so we know where the weekly is. I'm going to go to a 30-minute daily chart, 5 days or 10 days. We're going to go time frame. We can go 5 days. We can do 30 minutes. And what I wanted to do is technically show you the range from the prior day, high and low, what it is in relationship to a push up or a push down. We know the prior day was the low here and the high here on the prior day. So if I put this Fib up, we know when we came back to retest, we retested what? The 61.8 pushed up to the 150 extension. We fell back down and moved up. So the following day, every day, what I usually do, I look in relationship to where the chart is, the high for the week is, or the day is, and the low for the day or the overnight in relationship to where my midpoint is. My midpoint is basically yellow. My previous day high is up here. My previous day low is down here. So I know my low is here. My high is here. Am I trading inside the range? Am I trading above the range? Am I trading below the range? Looking for gap fills, non-gap fills, and what the sentiment is on daily basis in the stock market. I hope this is helping you so you understand how to look at technicalities in order to understand momentum. Remove drawing. We're going to go right now, go back to the daily chart 1 year. We can see we went back to the yearly. And what I want to do is break down a couple of ETFs that we put in the slide. So we're going to look at BIL, which is the small treasury bill in the stock market. If inflation is starting to slow down and the federal policy is going to start to settle, we notice the short-term treasury notes 1 to 3 month started to nickel its way up in price. And you can see it from the prior August push-up, the September push-up, as well as from the low November push back up. Does this mean we are finding balance in the market so we can keep interest rates between the 4.5%, 4.25%, all the way to 5.5%, 6% for the coming year, so that way the economy doesn't go into a recession? And we can see there may be value play in large cap, mid cap, small cap sectors and technology if there is balance in there. Let's take a look at the IEF. This is, IEF, my mistake. We can see in the IEF technicality, we're starting to come out of the woodwork, which we got a gap up, nice push coming back in. Is there balance in the IEF? Let's take a look at the JNK. I did the bonds this time a little bit before I do the futures. JNK, I don't know why I'm doing this. So we can see in the JNK similar situation, push up, balance. Do we hold so we can get the bonds back to rebalancing? Let's take a look at now IJH, sorry. I put this mid-cap ETF 2-3 weeks ago in my video, and I said keep an eye on the mid-cap. We can see that there is a change in the trend, and we can see that we balanced out. We got a double bottom here. We got a double bottom here. We consolidated. We had higher highs, and eventually we broke up. But we still have, if you consider this as a shoulder, this is a rounded bottom. Do we create a shoulder to continue up? On a daily basis, we are slightly above the 200 SMA when we tested it on Thursday, but we have the 250 above. We are in a downtrend. We can see it if we draw a line or a channel from high to low. If I take this high here to this low here, you can see it. It's going to be a little off. Or if I do it to here, you can see we still have this high. And if I grab this one to here or this one to here, we have tested it, looked above it, fell back in. In order for us to break out, we have to clear this channel and clear this channel in the 250 simple moving average. If I zoom in, we are in a triangle. You can see this is the high of it. Do we continue to break up the 250 to go up to this channel and test the 2, or do we fall back in this symmetrical triangle? If I take this one to here, the channel is wider. But if I take this one from here to the nearest one here, we are in a triangle and we are holding the 18 simple, the 89 EMA, the 116, and the 50. I know the 50, we have the FIB from high to low. The 50% is here, 38 and 61. So when you're trading, you got to trade what you see, and the sentiment, if it changes, don't be biased to one side. Let's take a look at EMB. And I'm just doing a little bit of, this is JP Morgan emerging market. We can see that the international market and the global market starting to change, and we are trying to push higher. Do we create a right shoulder here in order to continue and clear the 200 and the 250, or do we fall back to the 50 in the backside of this channel before continuing higher? Let's now take a look at what's going on a little bit. I don't want to go over too much ETFs or SPY or NASDAQ or XLK, which is the XLK is the technology sector. We can see it's starting to reverse, and we can take a look at the NYA New York Stock Composite, and we can see that there is balance. We retested the 200 SMA on the daily chart. We're still in that downtrend, but let's see if we can hold to break that upper channel on the top. let's go take a look at BTC. The reason why I want to put BTC, Bitcoin, after all the noise that happened in the market, or I use GBT, micro BTC, we can see that, oh, that's not it, slash micro BT, I think. Okay, the micro BT, we can see how far it's fallen. It came back to retest this breakdown channel here. Does this find support, or do we continue to that 13,000, or does that 16,000 get us back above the 21 in order for Bitcoin to get back above the 116, 200, and 250? We are underneath all those moving averages. So remember, if it clears the 18 and the 50, we have potential to continue back up. Pay attention to the price action in Bitcoin. Let's go now, take a look at the VX, which is I want to use the VIX, which is a little bit more VIX. This is the ETF for the SPX or the SPY VIX, which is the fear gauge and weakness or bullishness. We can see that last month when we first started, we created like a cup, a handle here. It couldn't break up. It made a higher high here. We retested 3 tops, if you call this, higher lows. Then we broke above it, looked again. We were thinking it's going to continue higher because the market is bearish. Then the VIX came back in quite a bit from the 1013 all the way back to that $22 range, and it tried to look up, fell back in, and this was trying to push up out of this wedge. You can see it was consolidating, trying to break up. Then we had that professional gap on the CPI report on that Thursday. We fell back in. We tried to push back the following week on the report, tested the 18 simple moving average and fell down. If this is not going to hold and it's going to fall through here, I think there's a gap between here and here. You can see it. Usually those gaps are fillable. So what we do, we get a box. We look at gaps in the chart. And if I do this and I extend it to the right, edit the property, and I can go as far as, let's say, 12. I go 12, 27. If I do this, it'll show us where that gap is. Sometimes these gaps are fillable on either side, to the upside or downside. So is this gap going to fill before the VIX can find a little support in the area or not? So let's go now to take a look at the crude oil. We know that the crude oil, the Brandon administration micro CL, I should use. That way we don't have too much noise on the charts because we use those fibs. We can see that it double topped up here. Prices were getting higher. Does this mean we found support here at the $76 range, $78 range in order to continue back up? Or do we fall through this area where the consolidation was before the Ukraine, Russia, and the crisis on crude oil and shutting down the pipes? Then we rallied again, did a double top, fell back in. This looks like an eye here, like double eye. Then we fell further down, grinded to where the breakout was, where the retest is. Does this mean crude oil has found a bottom, or is this a double bottom, or do we continue to the backside of this half channel? If I grab a channel from here to here, oops, I used a box. So what we can do, get the channel back up, grab a linear regression uptrend, and this will give us a little bit. I can get rid of this one, remove destroy, and we can see we are in a linear regression downtrend. Or even if I use a pitchfork, I'm going to use a pitchfork, this one, because last time we used the Fibonacci. We know that the high was here, the low was here, and if I use a pitchfork from here to this range here, and I want to show it to everyone, we are in that linear downtrend channel. You can see it. We retested every time the 50, that's the 61, or the 38, that's the lower one, which is the 38, or 61, that's the 78, that's the 23. Does this mean that crude oil has found balance at the 50, or is it going to find it at the 61 or the 23% and bounce back up? Or do we get a reversal right here, clear the 38%, come back to this to the 23 or the 78% in order to come back to this channel? So what I want everyone to do is usually pay attention to technicality and momentum in a chart without being biased, because if you are biased, you get caught on the wrong side and you pay the penalty for holding, because your opinion is getting you instead of trading what you see on the charts. Let's go to the last one here, and I want to do GC and the ES. GC is basically, I'm going to do the micro GC, which is gold. And we can see that gold rallied back up in relationship to the, no, that's not, oh, that's Vanguard. Okay, mega cap, I'm sorry, micro GC, my fault. And we can see that the micro GC is starting to come back up in gold, which is the GLD in the futures, the ETFs for the futures. And we have found a balance. Does this mean we create a shoulder right here around the 116 SMA or the 38.2 and the 89 EMA in order to break the 200 and the 250 in order to come back to the 25% on gold? Let's go back here, take a look at one other one, which is the S&P 500. We're going to use the micro ES, which is the S&P 500. Once again, you can see that the micro ES is starting to move back up. It's in an open cone, and we have broken this channel from this area here to this channel here and here. If it finds support even here at the 38 and continues back up, that would be great. Remember, we tested the annual high from last year. We're bouncing back up. Does this mean we can get back to the 38%? We're above the 23 to get back to the 200, 250, and the backside of the 4,200. Very important, the 44,050 area, because that 50 simple moving at the 200 SMA will eventually catch up a little bit lower to this area, and that would be about 4050, as well as the 250. The 250 would be here. I'd like to see the 4,200 if we can get a rounded bottom and continue up. So let's see what Monday holds for us. And let's go do one more. I'm going to show Amazon in relationship to Netflix. Amazon has been falling quite a bit. We're below the annual low for the prior year. We lost the 61. That means it came further down. If I duplicate this fib from high to low, what I want to do, I want to know where my high is, where my low is for the year at. You can see where they are. And what I want to do is grab that. Remember that fib that we said we duplicate to the bottom, and we duplicate. Even if I grab this one from here to the 0 line, we can see where the 200% is, or the minus 100% down move. It has to clear the 18 simple moving average to get back up here, but Amazon's still having a little problem at this area. But pay attention in case it moves up, because you are in a downtrend. Open cone, does it find support, or does it come back to the backside of this channel before breaking out? Let's take a look at NFLX, because Netflix, after the last week or so, has been holding very well. This was the monthly and the weekly. You can see I always do fibs. You can see that nice push up. It's got a gap here 2 days in a row falling back in. Does this mean it comes back, holds the 18, or does it hold the backside of this channel in order to create a rounded bottom, a cup here, and break out above, which is the 18 and above the 250, or does it hold the 50 and the 200 SMA before continuing higher in Netflix? So let's go back to ES, and I want to go to a fast time frame to explain what I have on this chart. And what I want to do is go time frame intraday. We'll do this last. We'll go just for 10 days. Remember, I have a lot of Fibonacci's here. We do have the annual fib. We do have the monthly measured move in yellow, and we have the weekly and the daily measured move on the chart. So what we're going to do is go to 4-hour chart, push OK. We can see the weekly high and low, which is the week high, the week low, which is here. We are sitting a little bit below on the profile, below the 50, but holding up the breakout from that Thursday, because this is the overnight action that happened on the CPI the prior week. But if I look at this range here, this is our daily monkey bar. I can go to standard, go monkey bars. We can see on a 30-minute bar, the sentiment on Thursday told us that the time spent was higher than the 50%. So the move has to be higher. But on Friday, because of the overnight action and the gap, and during trading hours, we stayed at the low almost in the all morning after the morning rush hour, gap up, fill the gap, stay in the range, and eventually close a little bit positive on the S&P, but the time spent in the POC were lower, but we opened here. And where did we close, by the way? Let's take a look at it. Where's our triangle here? It's right here. So the open was here. We looked down, we looked up, came back down, rallied back up in the afternoon and closed here. So is the sentiment on Friday telling us the sentiment is lower? Yes, because the 50% Fibonacci is above the time spent. So the sentiment is lower. And here is your extensions for Monday's range. I do have from where the close is to the low, how much we can move 100%. From the close to the high, how much we can move to the upside. But I want everyone to pay attention to these three heights here, this high here, this high here, and this high here, in case we break to the upside. We got to pay attention to this low here and this low from the prior day. If we break or retest it and get a bounce back up, in either side, you trade what you see, not what you think. And I hope you understand that the volume profile is here. Usually when you have a lot of time spent in contracts, this is where the value low is the shadow value area high, and the times and the the time spent is here similar, but you can see here and here are very similar in relationship to that push up. If you look at the contracts here, we have a lot of time and contracts spent here, as well as here and here. The time spent was here, time spent was here, eventually pushed up. So, but the next day, what did we have? We have two POCs that we're developing. We have another distribution here. But most of the time during the trading hours was spent in the lower territory and the overnight before we got the push up, came back to the bottom, retested, and bounced back up to close here. So let's go back to the chart. We go to standard. And when we zoom in here, we understand our range where it is for the week high and low, which is once again, 0 to 150%. And this is for the next day. Every day we set it up to know where the levels are. Take care, over and out, and hit the smash button.